Yo, yo, yo. Welcome back to the channel. Congratulations if you played Call Side. Since Friday, we've been kind of ringing the bull bell. And today at Open, I mean, holy shnikes, dude. Let's not count pre-market because obviously I know most of you guys are trading options. But, you know, from basically our call out where we were saying, hey, you know, this is likely a bottom. You saw almost 4.5% on SPY. So if you were playing that side while everybody else was super bearish, congratulations. You probably had a very profitable position this morning whenever the market opened, and hopefully you took profits because it absolutely dumped its face off afterward. So let's talk about that and talk about what we see coming in the near future. If you haven't already, make sure you subscribe to the channel. We talk SPY technical analysis multiple times per week. And yeah, we're just going to get into it. So going into the Fed meeting tomorrow, obviously the stakes are high, you know. All the chips are on the table. The bulls, the bears, they're going to be speculating. They're going to be schmeculating. They're going to be percolating, if that makes sense. It might not. Yeah, so right now what you're doing is you're riding up this uptrend here. You bounced off of the 707 Fibonacci retracement level of $399.32. You slipped a little underneath here, so down to 12 cents. And then you're kind of bouncing, almost looking a little flaggy here, I must say. Little, I don't know. I mean, it's gonna play itself out over futures. I think that it's actually likely that futures is relatively green, maybe lightly green overnight. But obviously, the real likelihood is that you're gonna see Chop City until Powell speaks. So, yeah, I mean it's gonna be tough to trade options. I'm not gonna lie, because basically the direction is gonna be extremely hard to account, like extremely hard to predict throughout the day tomorrow, and also options are gonna become incredibly expensive as IV continues to rise. They already are extremely expensive, but they're gonna be even more inflated and bloated with volatility. Implied volatility value, and you're in a really weird place on the chart, you know. I mean, overall you're kind of just sitting in the middle of no man's land as far as like macro support and resistance goes. We have drawn on the chart here. Let's zoom out here so you know what each line is representing. So in red, we'll just make the macro stuff. So purple is the macro downtrend. So this is the downtrend. And I have it drawn from here now. I mean, I guess you could draw it up here because you do have this new resistance that you're, I mean, you know, until you break this, you're not really out of your downtrend now because you've created a new version of it, right? So this is definitely going to act as resistance at some point. You have the rising wedge that we were in before in red, the supporting bull trend that we used as justification for our long call on Friday, and going into CPI, and then you have this white dotted line, which is a midline-ish sort of play here that we're just trying to pay attention to so we get a better understanding of where we might stand within the local price action. This one's not as definitive, but we're just using it as a point of reference. I mean, I will say that structurally, you know, if you zoom in here, this does appear accumulative here, okay? So you still do have this accumulative look that we've been looking at. And now what you've had is like a sign of strength sort of look, and now you're backing up to retest this key liquidity level that you had at the top, right? So it's not really like obviously this behaves as a local distribution, right? That's that's essentially what the backup phase is the markdown of a distribution after a sign of strength. So it's not anything irregular that's occurring here. Again, I mean, like everybody took profit. Like everybody took profit at open, right? Because if anybody was long, and probably institutions, because retail sentiment was incredibly bearish on Friday, and if it was bullish on Monday, it was still very uncertain. There weren't like rabid retail bulls, right? So institutions were mostly the ones that capitalized on this move, and they might not have even capitalized on the long side as much as they capitalized on setting this trap in order to then buy more puts in short to drive the price back down, right? So it's not necessarily even that institutions were incredibly long for this. Rather, they probably just set up a good short opportunity for themselves. So what do I think is going to happen? I mean, you are in a relative indecision zone, right? Because you're not really sitting on a macro support or resistance. I don't know if this is my second time trying to record this video, so I don't know if I pointed out that this was a Fibonacci retracement down to the 707 here. You bounced out of your golden pocket and bounced up. And I mean, like I said, you're kind of in no man's land. Like you're kind of teetering around. You're going to want to figure stuff out. I will say that there was, the first time that I recorded the video, there was a move that I was looking for that might have driven the price back down. Full disclosure, I opened a very small call position, literally speculating on futures being green. After the fact, when I was making the other video, I did notice that there was a possibility that you had the convergence of I can't remember. Oh, yeah, it was this downtrend, sorry. Of this downtrend, right, which you retested with your uptrend. And this actually happens overnight. So let's see. You'd have to go down 1.4% in the futures. So I do kind of feel like that's unlikely because this is like in the middle of the morning. If that happens, it would have to be some random bad news or something, like maybe, I don't know, like European or maybe some sort of leak from the FOMC or something. But I kind of would like that look if that were to occur, because it would create this, it would give you the opportunity to kind of round out and create this reaccumulative sort of pattern. And when I say like, I mean like it in the sense of like bulls are good and bears are bad, but I don't really have a preference. I'm just saying, like, it would make me like the chart more. It would make me think that the chart is more likely to go up. I like bearish setups too, but I just meant it in that way. But I still have a relative bullish bias. Like I just feel like retail is getting swung around. I mean, we don't have to say that. I mean, retail is getting like battered right now, right? Because like hyper bullish. I mean, dude, it is so funny how Friday it was like your grandma was bearish, and literally at open this morning, Twitter is just like, oh, CPI is 7.6% or whatever it was. It was like 0.2% lower than what they were expecting. I think it might have been 7.1. I don't know. And and I mean, it seemed like every bulls on parade, dude. And then they just dumped it like the whole freaking day, dude. Like, it's so hilarious. And so now all the bears are back. Oh, it's a bull trap. I mean, dude. Like 2 hours into, I literally saw Twitter. Twitter shifted from everybody's bullish, inflation's going down, Powell's probably going to be dovish, everything's great, to that was a bull trap. We're going to hell now. Powell's going to send us to hell within 2 hours. I mean, it's actually incredible. I said on Twitter that I was going to close my calls at open. That's what I did. I left one runner. I had one runner just in case it went to like 420 today. Like, But I was already really sized down because I didn't feel comfortable swinging as much as I had in the position yesterday whenever we had that rally in the last hour. But yeah, so from a sentiment standpoint, I do favor the idea. Like, bears are still incredibly, like, bearish retail seems incredibly, like, confident, right? And bullish retail, and again, this is, a selection bias, right? Because I only have who I follow and who follows me, replying to me, that sort of thing, or whatever. But bearish retail seems incredibly confident and sure of themselves, while bullish retail, that is in my following / me following them, seems much more shaky, much more uncertain, and less confident. That is exactly the sort of sentiment that was occurring on Friday, right? So for me, I'm not saying that sentiment is everything, but what I will say is that as long as we stay above this green uptrend, as I've said over and over again, as we maintain this green uptrend, I am personally going to remain bullish. I do, as soon as you break it and you hold it, because obviously there is the possibility that you do one of those freaking, every time that FOMC happens, you have this, like, if you look at the minute chart, it's just like, right when Powell opens his mouth or whatever. So if you break it momentarily, I guess it wouldn't go that low. If you break it momentarily and then it just shoots right back up or whatever, I'm not saying that, like, in that moment I'm like, oh, I'm super bear. I mean, whatever I have at that point, I'm kind of like riding it to zero, if that makes sense. And so I would assume that if the chart looks like this, right? If you have this kind of swooping, you come down and you're testing these trend lines in this way, and you don't have this really, it doesn't look like, it looks more accumulative. It doesn't look, I'm going to draw what a more distributive look would look like. It doesn't look like this, right? Where it's holding real high in the range. Instead, it's kind of holding real low, making people feel sad and bad about their long positions, making bull and bears feel even more empowered and strong. That's when I'm bullish. And conversely, if it's spiking up and down and bears feel relatively uncertain while bulls feel confident, then I'm kind of thinking that it's distributing and that the likelihood is that you get sent down and out of this uptrend whenever Powell opens his mouth. Obviously, this timing isn't right or whatever. I was just kind of roughly drawing. So you get the picture. Yeah, so I'd imagine he's talking at like 1 or 2 p.m. So by that time, you would have already definitely, you would have been past this. So, because this is 5 a.m. Wait, no, this is Thursday. Wait, damn it. Okay. See, this is the thing. I'm thinking, like, it's very possible that Powell, because everybody's expecting this big old move, that's the other side of it, is that you have the sentiment thing, but you also have everybody's expecting volatility. That is a key thing. It's very possible that because of this CPI report and what has happened as a result of it, Powell doesn't have this humongous influence based on what he says. Now, if he comes out and says 25 BPS, then, yeah, the market's going to rock it. But if he says 0.5, it's possible that you have a lulling sort of, oh, yeah, that's pretty much what we were expecting sort of reaction, which lends itself, if you remember, over the course of the past few weeks, the videos that we've made, which lends itself to that sort of, oh, well, it was good, but it wasn't that good sort of reaction, and then that eventually leads you to breaking down and out of here. That makes a lot of sense, okay? I don't know why I had this mistimed like this. So it's possible that Powell doesn't have this humongous influence on the direction and price. Initially, you'll have the crazy FOMC open thing or whatever, and then you might end up flat. I mean, absorb everybody's implied volatility in their options. I mean, that would absolutely kill retail. And then it's like, oh, that not the end of the world. And then you kind of build out this right shoulder, and you have maybe this head and shoulders sort of look of this distribution. I'm just playing out scenarios. To be honest with you, I don't really have like a great bias. Like I wish I did, but they're making the chart as foggy and it's hard to. Ooh, my camera's like all over the place right now, focusing. They're trying to make the chart as foggy as possible and hard to read as possible at this stage, because it's a big moment. So that's kind of, these are the things that I'd be looking for. Hopefully this video was useful. Hopefully I didn't like waste your time, because I'm not highly convicted anymore. We had our play off of the bull trend. We had a huge, way more than I could have ever expected as far as a move. I think I was calling for like 405 or something like that yesterday. We opened at like 412, so like I'll take it. And then from here, like maybe tomorrow isn't really the day to make a decision on the market, as everybody thinks it will be. It's certainly a possibility. Maybe you just kind of have some boring riding of this uptrend again, and then from there we'll make a better decision. But regardless, whatever you play into Powell is a lottery ticket anyway. I suggest you follow me on Twitter. I'll certainly give my take on the chart, moments before Powell speaks. And but I wouldn't like bet. I'm not as confident. You're not on a major support or anything like that at this point. So like tread lightly. Tomorrow, if you played calls today, you should be happy with your with your profits. Hopefully you took profits at open and you didn't hold. And then, we'll see what happens. If we just hang out in this zone, that's probably a good indication that, like, you're going to see a really big, ugly dump, and that's going to be the next opportunity that we look for. Or you break the uptrend, the downtrend, and you go to the moon. So, anyway, that's the video. I'm repeating myself. Said things in many different ways, as I always do. Hopefully, you got something out of this, and until next time, I'm going to get some rest or something. Peace.